So Zayden, please unmic and let us know what your question is.
So my question is this. I've watched a couple of your videos now, and I am buying a house. I will be closing at the end of June. And so I was given a suggestion from a loan officer prior to coming to your videos that said, it's kind of similar to your last situation. He suggested that I go ahead and pay 2 months in advance on the house during July, which is that period you don't have to make a payment. And then also try to get on a bi-monthly or bi-weekly schedule where I'm paying like my mortgage in 2 payments each month instead of just a 1 payment a month. And he said that would cut me down to kind of that same range of like maybe 9 years, 8 years. But I wanted to know if I did that and also paid an extra, maybe as much as an extra $2,000 every month. Number one, does it make sense with this plan that you guys have? Does it kind of make sense to do that? And, would that work doing all these different things? Like I said, you're paying 2 payments for your monthly payment instead of just in 1 payment. And I'm paying 2 months ahead of my mortgage payment starting, and then an extra $2,000 every month.
Okay, Zayden, here's what's going on. We know so little about the lending process. And do you know, when you start your mortgage and when you pay it off, when you make the very first payment and when you pay the last payment, do you know that the bank charges you, when it comes to mortgages, that's when you pay the daily interest. That's the only 2 times. The rest of it is just kind of built in. So what he was telling you is that, when you get the mortgage and you close and you don't have to make a payment for like 30 or 45 days, something like that, that ain't free.
Right.
That ain't free. All right. There's a daily interest charge for that. And what he was saying is that if you go ahead and make a payment now, you don't have to just have that daily interest build up on you. So that was good advice. All right. Now, everyone who becomes one of our clients here at P.I.L.L Method, they generally, if they're already doing a biweekly payment, they end it immediately because most of our clients just make 1 payment a month. And the other thing is we don't add extra money to principal every single month. You can get a spreadsheet for that. You don't need us for that. A spreadsheet will do that for you. With the P.I.L.L Method, you make strategic payments at particular times during the year to make sure you're saving the maximum amount of interest per dollar. See, the reason why you pay off a loan is not to pay it off fast. The reason why you pay off a loan is to pay it off cheap, is to cut the interest costs. So we're going to teach you everything you need to know about how interest cost actually works and how we can do certain things at a certain amount of time to make sure that you pay the least amount of interest possible. All right. So we simplify a very complicated process by giving you like a financial GPS saying, do this with your money on this day in this month with this amount and apply it to this particular loan. And we're going to show you how you can save the maximum amount of interest per dollar applied. And our clients don't pay off their loans in 23 years because that's the most you're going to be able to do with a biweekly payment. Our clients pay off their loans in 7 to 9 years. We save you 23, not pay off in 23. So that's going to be the difference there, Zayden.
Okay. So are you saying then that you would switch from doing the bi-weekly to just the 1 payment a month? That's the better way?
That's the way better way.
Okay.
Because see, here's the thing. When you're making a bi-weekly payment, there's only 2 months out of the year that you're going to make a third half payment.
I got you.
Okay. And while you're waiting to do that, you're paying some pretty expensive interest payments while you're waiting 6 months to put that extra half payment on. That's the only one that saves you interest. You know how many people I talk to who have a biweekly payment and they're making their payment on the 1st and then they make another payment on the 15th to do their 2 payments a month. And I ask, do you believe that by paying on the 1st and paying on the 15th, you're actually saving time and interest? Most of them say yes. The answer is no, you are not. Mortgages accept only full payments and then they apply it. You pay on the 1st and then you wait and pay on the 15th. Then they combine the payments and then they apply that to your mortgage. That's when the money is applied. not till you make that second payment. The first payment does nothing for you. Do you know why? Here's what I believe. You know why I believe that mortgages companies love the biweekly payment system?
Why is that?
Because some of you got so super smart that you don't pay your mortgage on the first. You use up all the grace period because it doesn't cost you any more money to pay on the 15th of the month than it does on the first. So they said, well, shoot, if I get them to pay me on the first, at least we can have that money in our coffers so we can make some interest on it. What do you think about that?
No, it makes perfect sense. And I also can understand, though, people wanting to do that split payment because just like me, most people get 2 checks every month. So it kind of makes it seem like it's easier. I get what you're saying completely.
Yeah.
And you're also saying on the amortization schedule that even if you did the buy, the twice a month, it's still showing up as that one line.
Right. Now, here's the thing with that. Now, when it comes to the biweekly payment for that reason, what they're doing is putting that money in a savings account for you that makes no interest.
Right.
Well, if you want to make 2 payments, make 2 payments to yourself. Put that money in your savings account and let you make the interest on it.
Makes sense to me.
And then when you get the second payment, then give it. So listen, folks, these things that are being done for us, they seem like favors. But what it really is setting banks up to be able to do what's called fractional reserve lending. Do you know what that is, sir?
No.
Fractional reserve lending is for every dollar I have on deposit, I can lend out 7 or 8. Okay. So this is why I need you to go ahead. Let me give you a toaster or $100 so you can come in and put your money in my bank so we can run your checking account and, give you a savings account. Please do that. And I will give you a toaster and I will pay you 1/10 of 1% interest on your savings account. So we could do that favor for you. Same thing with escrow. As a favor to you, we're going to make sure that we pay your taxes and insurance for you. Now, these are the folks that have a choice. Some mortgages don't offer you the choice. I'm going to tell you that right now. But for those of you that have a choice, they're going to do a favor for you so that you can have an escrow account so that you can put money in a savings account that pays you no interest so that they can pay your taxes and insurance for you as a favor. And I'm doing air quotes for you who are listening.
Yeah. And I remember you saying before, it was really important. I know you haven't said it today, but about making those extra payments and making sure that you tell them that it goes to principal and check to see if they have any rules or anything on paying those payments, depending on who your lender is.
Right.
Making sure that it goes directly to principal. Otherwise, they may put it, like you said, into an escrow.
Exactly. And they know where you want it. They know where you want it, but they'll put it in the escrow faster than you can shake your head. So here's what we're talking about. Just follow the rules. When you follow the rules, we're going to be good. And then what we're going to do at the P.I.L.L method is make sure you do the right thing at the right time to make sure you're getting the maximum result from spending your money. Okay. You want to know when you make this prepayment, you want to know that you're saving the maximum amount of interest per dollar. And we have been doing this for 88 years. Amortizing mortgages is 88 years old this year, started in 1934. And for that amount of time, most people have never known how much interest they save when they give the bank even an extra $100. But we give it because we're conditioned to do it and everybody is doing it. But if folks around the dinner table start talking about, you know what, I paid it at this time of the month, I paid it with this much money, and I saved $6 in interest for every dollar I applied, instead of what I was doing before and when I was only saving $3 in interest for every dollar. Nobody talks like that. Do you know why? Because we're not taught to measure our results when it comes to mortgages. The P.I.L.L method wants to bring that into the conversation and make sure everybody knows how much interest you're saving per dollar so you can make really good decisions with your dollar. I want to get the biggest bang for my buck. How about you, sir?
Definitely.
There you go. So do you know how to get a hold of us?
I do. I actually have your page up. All your contact information is here.
All right. So listen, folks, if you just came into the room, then here's what we're talking about. We're saying go to ice10k.com and click on the button that says get a savings and earnings report. And that will get you to our financial form. Just fill it out. And then we'll tell you the month, day, and year you'll be debt free, set up a consultation for you, tell you how much interest you're going to save. And that's the savings part. But the earnings part is that interest saved. If you're careful, you can invest that money into your family to start growing generational wealth with interest that used to go to the bank. Now we're firing on all cylinders when we're saving money and making money. Oh my gosh. I love, love, love every bit of that.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.